Welcome back, and we move to our opening panel, Reinventing Post-COVID African Finance. We are going to have a great session. We're going to hear from Ahmed Minister of Finance, Federal Democratic Republic of Ethiopia. And also on our panel, we have Ade Ayeyemi, Chief Executive Officer of EcoBank. We have Delphine Traore, who is the Chief Operating Officer of Alliance Africa, and Paul Deleuze, who is the Chief Executive Officer of Orange Bank. Now, up until this year, the financial industry in Africa was, ladies and gentlemen, the most dynamic in the world. But as we have heard, the current realities have really presented challenges. And yet, they also present opportunities. The question is, how do we rethink the trajectory of African finance in light of everything that we are dealing with in this COVID era? First, we're going to have an expert presentation, and I want to welcome our speakers. Sandra Sancier-Sultan, who is a senior partner at McKinsey, and François Jeux de la Girancourt, who is a partner at McKinsey. I hand over to you, Sandra, and François. The floor is yours. Thank you.
Thank you, Julie, and good morning to all. François and I are very honored to be with you today. We are gathered to reinvent post-COVID Africa finance, and that is a very inspiring ambition. But how should we think about the starting point? Looking back at 2020, one could be tempted to look at the glass half empty. Indeed, banking revenues after cost of risk were down in 2020. They were down 20% for the 4 largest African banking markets. That is really tough, especially if you compare it to the growth prior to the COVID crisis, which was at a healthy 6% per annum. If we are to believe the scenarios going forward, we will be back to that 2019 level at the earliest end of 2022, most probably in 2023. So more than 3 years lost for the African banking industry. At the same time, the insurance industry, and we have Delphine on the panel, has proven more resilient, but still more than half of the growth in 2020 compared to the historical one, so has been hit as well. So you could say this is a very sobering view as we open this forum. This is a view that is increasing cost of risk, lower for longer interest rates, and a subdued economy. But this is only one view, one way of looking at the situation. Another, if you look at the glass half full, is to notice how the number of fast acceleration we see across the continent on a number of parameters that are absolutely critical to the transformation of the industry, to its reinvention. Let's take the numbers of active customers in bank digital channels. It was discussed earlier. The COVID crisis actually accelerated the digital transformation. But look at the numbers. The number of active customers in bank digital channel across Africa saw a 20% year-on-year growth from June 2019 to June 2020. And this is by far the fastest growth of all the other regions in the world. This number continues to increase in the second part of the year. And in some countries like South Africa, where digital banking activity was actually only slowly progressing, was kind of plateauing before 2019, we have seen nearly a 5-time acceleration in digital adoption. At the same time, the crisis unlocked real acceleration in electronic payments. With lockdown, small and medium-sized businesses moved online. banks and fintechs such as Paystack, Cellulant, DPO. On this page, you have Flutterwave. We're quick to offer solutions to businesses who had only accepted cash in the past. This morning, Flutterwave confirmed 170 million round of additional financing. And this is a good testimony to the growth, the real growth that is happening. What's also very inspiring is the acceleration in mobile finance services overall. In 2020, countries such as Ghana and Togo sent payments of emergency aid through mobile wallets. The financial industry in many countries waived transaction fees for person to person, and regulators in countries such as Morocco vastly simplify the process for wallet opening and merchant onboarding.
So despite the tough 2020, let's not forget that Africa has been and remains a growth story for finance. There's still a number of underserved, underbanked, underinsured clients. If you look at these numbers, these are the bankerization rate, 33% in 2014, 47% in 2019. If you believe the projections will be at 62% in 2024, almost doubling in 10 years. And that's only to talk about banks. Now, let me quiz you with a few big numbers. I'm sure some of you have recognized those numbers. 180 million. That's the number of active mobile wallets in 2019. A conservative projection believes that in 2024 we'll have 400 million active wallets. More than 1.3 billion. That's the total amount in VC funding and M&A for African fintechs in 2020. A tough year for VC. And 2021 is starting also very, very strong. More than 50%, that's by how much online payment is projected to have grown in 2020. Much more than twice as more as electronic payment, which is already a multiple of growth in GDP. So if Africa Finance is all about growth, the question is, who will capture this growth? Africa Finance has been dominated by bank and insurance companies. Now we have new players and the incumbents have evolved, which changes the dynamic in the industry. Now, if we look at banks and insurance, they still represent 95% of the revenues. And today, several groups have truly pan-African scale with footprint across the continent. The question is, can they capture and serve the underbanked or the underinsured? Or will they be tempted to continue focusing on affluent retail customers and large corporates? Can those Pan-African groups be catalysts for the regionalization of trade and services? Our finance operators have already changed the life of millions of Africans. The question is, are they really the solution for the unbanked? And more importantly, can they be successful beyond payments to offer full financial services? 2020 has been a great year for fintechs with great successes, for example, in payments and in merchant solution. The question is, can they scale to really have an impact at the scale of the continent? And can we see more innovation and more success stories where is needed, for example, in data services? We've seen quite a few neobanks, in particular in South Africa in the past year, with truly innovative Africa-centric models. The question is, can they be profitable? Lastly, big tech. Imagine what would happen if we saw Facebook roll out Facebook Pay on WhatsApp in Africa, or if Alipay rolled out beyond South Africa, or even beyond banking, if we saw Google launching its Googleplex banking services to Africa, as it's doing in the US. Actually, big tech is the biggest threat to incumbents. So the question, actually, between all those players, how much of partnering and how much of competing will it take to be successful? So as we can see with the past month, Africa Finance is already accelerating its reinvention.
François and Sandra, amazing, amazing. How much partnering and how much competing will it take to be successful? It's the thought that you've left me with, and some fantastic insights there. Thank you so much. We're going to now hear from our panel with those statistics that have been shared, with insights and the learnings that we've had from McKinsey. We now go to our panel. I introduced them earlier. Quick reintroduction. We have Ade Ayeyemi, Chief Executive Officer at EcoBank. He is an experienced banker who, before joining EcoBank, had a very long and successful career with Citigroup. We also have with us Delphine Traore, who is Chief Operating Officer of Alliance Africa. And Delphine is also the president of the African Insurance Organization and was elected president of the Insurance Institute of South Africa in 2015. And we have Paul Deleuze, Chief Executive Officer of Orange Bank. He's the CEO of Orange Bank in Europe and the president of Orange Bank in Africa. An excellent panel. Thank you all for joining us. Ade, I think I'll begin with you. And frankly, you know, I have not walked into a bank for the past maybe 12 months. So I'm assuming there's been a lot of change for EcoBank, a lot of transformation. Take us through, you know, how this period has maybe affected and changed your business model. Has it?
Thank you. Can you hear me?
Yes, very loud and clear.
And good morning, everybody, and thanks for inviting us. And Honorable Minister, it's good to be on the same panel with you. Thank you so much for joining us, encouraging the private sector and connectivity between the private sector and the public sector. You're right that 2020 is a time that all the things we've preached as a bank and also as a financial institution player became accelerated. We've been talking about digital, that we need to digitize our interaction with our customers, that we need to digitize our interaction locally, domestically with ourselves. We need to digitize our interaction with partners and everybody. And all of a sudden, all those things that we've been talking about became imperative, and customers couldn't come to the branches. The customers couldn't even get to ATM, and therefore to continue to transact became easy because we put those things at their fingertips historically. The second thing was that internally, people have to work from home. And remember, the banking industry, other than the nuclear industry, is the most regulated. And therefore, we've put in place procedures and technologies that enable people to be able to connect from the comfort of their home and work as if they're in the office. Finally, customers that still took loans from us and want to expand their business, some businesses were still going on. So the question is, how do you do on-site monitoring of customer projects when you can no longer travel? And all the technologies that we put in place are those things that enable that to happen. Now that we've demonstrated that those technologies actually work, as we go forward, scaling them in partnership with others, it is what's going to enable sufficient financial deepening so that we can create wealth in the continent. I hear questions about competition, partnering. Ultimately, what needs to be done is sufficiently large that we need to scale together to be able to get this problem solved. So what we're doing is putting our platform at the disposal of all the people that want to participate, be it MNO, be it other banks, be it fintech, because if we do that, then we're in a position to accelerate the inclusion of people within the continent. So that's the way we are looking at it, creating platforms, working with others, understanding that when we do that, then we are able to connect to the continent much faster. Thank you.
Thank you for that, Ade. We need to scale together. I love that. Delphine, coming to you next, and clearly lots of change in banking. How has it affected insurance, and how are you coping as an organization?
I fully agree with Ade, noting we need to work together better. EcoBank is one of our biggest partners right now in how are we going to make sure that we digitalize ourselves. So for our perspective, there's been two main folds, right? It's been how do we ensure that our people are able to work from home. From the time the pandemic hit at the beginning of March, we had to move quite fast into investing. We moved our people from 20% being able to work from home to almost 100% being able to work from home across all countries and all of our 1,400 staff. That was quite important for us to keep them safe and then to be able to continue serving the customers. The other thing that we've done, and we had started that before the pandemic, but it became even more important during the pandemic, we have invested 10% of our annual revenue on digitalization. And digitalization from the inside out. We needed to make sure that our infrastructure and also our internal system were solid enough so that we can also start offering that to our partners. So what we're doing right now also is to make sure that we are able to provide insurance coverage for anybody on the continent, essentially.
Thank you, Delphine. Great agility there. Great agility. Paul, I come to you now, and just looking at the figures shared, it really looks like the growth for digital is incredible. Take us through what you've experienced in your space.
Well, thank you, Julie. Thank you for giving me the opportunity to present something which is built by the non-bank, which tries to be a bank. Perhaps just to tell you how we reacted, it's necessary to tell you how the mobile payment came to where we stand today. And for that, perhaps I need to tell you how over the years we have built this mobile money business. I think there have been three steps in building this mobile money. The first step for all mobile money players, at least in Western Africa, was 10 years ago, when we decided to launch something very simple, very basic, just to allow P2P transfer, local P2P. It goes surprisingly well. You said the figures. For Orange, we have around now 50 million customers for Orange Money, out of which 22 million are monthly users. So it went very well, very fast. That's why we went for the second step, which was to expand from pure P2P transfer to more elaborate transaction, always in the transfer business. That's why we went for international remittances. That's why we went for payment, administration, trade payment. That's why also we have started to make agreements with other mobile money players. For us, like Orange, we need a significant JV with MTN, the South African mobile operator, because we feel that we need our mobile money to be connected with other operators. Why? Well, for a reason I think that François explained very easily, is prevent from the big tech to arrive with over-the-top solutions. And then we went for the third step, which is the one we launched during the pandemic, which is going beyond payment for real banking. When I say banking, it's the microfinance, micro-savings. And in fact, we launched the bank in 2020, so in the middle of the pandemic in Côte d'Ivoire, and we launched it when we respected the agenda and the calendar we have for this launch, which means that we are not that much affected by the pandemic. Why we believe that we can succeed in that business? Well, mainly for three reasons. First, we have the access to the customers. We have access to more than 100 million customers in Africa for Orange. Second reason is the data, because we know the behavior of the customers, and we may, as a telco player, have the only structured data which exists on the unbanked population. So it's a real key asset be able to score these customers to know if we are able to lend them money or not. And the third asset we have is access to liquidity. Thanks to the mobile money, we have access to a significant amount of liquidity, which we can lend to the customers, which is not always the case in microfinance. The only thing we lacked as a telco player was bankers. That's why we have decided to hire senior bankers to develop this business. That's why you may have seen that in Côte d'Ivoire, our business of Banque Africa is led by Jean-Louis Moncomé, who is a very seasoned banker coming from BNP Paribas. So all in all, we respected our plan. The impact of the pandemic, well, it was twofold, but I like what Sandra said also. On the negative side, yes, we have the economic impact, which led people to do less transaction or less value transaction. On the other hand, we have the rapidly growing digital usage, which we see clearly accelerating. So all in all, we finished 21 exactly at the point where we envisaged it in 2020, exactly at the point where we envisaged it 18 months ago, in terms of number of customers, in terms of revenue, and so on. So I think these two effects were balanced: less economic value, more digital development. That's why we're quite confident that on the longer term, the impact of the pandemic will be, as it was said by McKinsey, a clear accelerator.
Thank you. Thank you for that. Thank you for that. I take from that really the word interconnectedness, and we see the shifts, significant shifts that are being made. I want to come now to a government perspective, and we're so happy to have Ahmed Shide with us, who is the Minister of Finance from the Federal Democratic Republic of Ethiopia. Minister, great to have you with us. You've heard from all the different stakeholders, their experiences. And just looking at Ethiopian growth in 2020, which is set at 2% against around 10% in the last decade, what do you expect when you look at the financial sector in terms of recovery? What would you like to see?
Thank you, moderator. Indeed, Ethiopia, like all other countries, has been impacted by the health effect of the pandemic. COVID-19 crisis and its containment measures have affected almost every aspect of our life, affecting big and small businesses, disrupting supply chains, causing the decline of some service revenue, service export revenues, and interruption of tourism and transport system. The containment measures we took were unique in that they avoided complete lockdown approach. We were very careful. We didn't shut down a lot of things. We were very selective in educating in the health services as well. So only certain sectors which can contribute for the expansion of the pandemic were partially closed, while most part of the economy has continued to work. Despite all this, the economy witnessed a growth of 6.1% in 2019-20, which is a very strong positive growth. And in 2021, we still expect to show a positive growth of about 8% within the context of the comprehensive economic reform we are embarking on. Ethiopia is implementing a homegrown economic reform program which focuses on sustaining growth and correcting the macroeconomic imbalances. And it has multiple components which include reforms to the financial sector. Specifically, modernization of the financial sector includes the preparations to establish a capital market and the strengthening of the treasury bill market, as well as modernize the monetary policy framework, which we are working together with IMF. We are under IMF program, and we have also a strong program with World Bank. Moreover, we have also worked to strengthen Commercial Bank of Ethiopia's balance sheet, which has more than 60% of market share in the banking sector. So its improvement is also significantly contributing to this. The National Bank of Ethiopia is also providing liquidity support to the private banks to mitigate the impact of COVID-19 on the performance of banks. They have been lending for the private companies through lending to the private banks to withstand the impact of COVID-19. We have also made bold measures to eradicate the 27 NBE bill requirements. Every commercial bank borrowing was required to buy 27% NBE bill, treasury bill, which is used to finance various government and development bank financing. So we revoked that. That brought significant space to the commercial banks and to commercial lending and improved their liquidity as well. The strengthening of the capacity of supervisory capacity of the National Bank is also one of our achievements. Our SOE reform and debt reform programs will ensure that we ease the unsustainable build-up of debt while ensuring the SOS debt to our banks and continue to be serviced. With lower volume of public sector loans, particularly last year and this year, our banks will have more headrooms to lend to the private sector, including entrepreneurs and the startups, leading to strong private sector growth. Ethiopia's banks are also supporting access to finance by both individuals and the private sector businesses. Additionally, from the government and the regulatory side, we are developing a competitive and a well-functioning treasury bills market and facilitating the development of interbank money markets. The treasury bill market is developing fast, and budget financing is also partially linked to treasury bill financing. And this significantly improves the availability of budget finance as well. We are establishing secondary bond market and the stock exchange market in close collaboration with the private sector. Given the economy is performing well and the implementations of the reform is being strengthened, we expect the financial sector performance will show certain and strong growth in 2021. My expectation from the financial sector, and importantly for the financial sector, are that the sector remains resilient and that we are able to continue with our reform. So inclusive finance and banking sector, together with the digital economy and opening up of the telecom sector, will further improve this reach. Ethiopia's banks have played a pivotal role over the past decade in broadening financial access, increasing national savings, and financing major public and private projects. So we are careful on the new project. We're already financing ongoing projects, and we are rebalancing the financing from more massive public-led to more of private sector enabling of development financing. In our current environment, the banking sector shows no sign of slowing growth, and both deposits and loans have largely continued along with their pre-COVID trajectories. We have not seen a major spike in non-performing loans and maintain adequate provision levels and a strong growth in new lending. Thank you.
Thank you for that. A lot is being done, and thank you for taking us so comprehensively through everything. Coming to a question now that I know is on everybody's mind here. The African finance space for a while has been looking to Ethiopia to liberalize the financial and telecom industries. How has the current crisis affected your plans? And what is the latest information you can share with us on that? I'm sure everybody is very keen to learn more.
If anything, the COVID crisis has assured us is that we cannot wait any longer for this necessary reform. It emboldens us to move on this reform commitment. Ethiopia is strongly committed to reforming its telecommunication sector and the financial sector modernization. This is part of our 10-year perspective plan and our digital strategy and the core aspect of the homegrown broader economic reform program. To liberalize the telecom sector, we have decided to issue 2 new telecom licenses and also to provide 40% of Ethio Telecom, which was the government monopoly. It will not be anymore after a few months. So this reform is progressing very well. We are on the process of receiving offers from the globally known telecom operators. We will soon finish the evaluation and award accordingly, particularly for the 2 licenses. By opening up our market to additional telecom operators, new technology and a stronger network will improve the connectivity and access for economic transformation and maximize opportunities presented by the digital economy. So we are on track. We are in the bid process. We are soon finalizing and then make the award. And then the Ethiopian market are open to these telecom companies. So this will bring significant boost for the digital economy and for the financial sector industry as well. And it will be also a bigger source of growth to complement all the existing source of growth, and that will diversify the source of growth. And that is the main objective of the homegrown economic reform, which is diversifying source of growth and make sure that private sector plays significant role. Government should continue to have the enabling role on this. With the expansion of the service, we aim to address digital gaps in remote and hard to rich areas as well. Also, COVID has affected global economy. It has not affected our telecom liberalization process. We are on track and we will continue that one. In fact, we have learned from this crisis that digital economic development and liberalization of the telecom sector is very key. In terms of financial sector liberalization, we are contextual in this. We see through the lens of the comprehensive reform, and there are various steps that have to be taken to consolidate our reform. But I think now we are very pragmatic and open-minded on even on financial sector. So, but this will be coming down the line after we consolidate other measures of the economic reform. So definitely down the line, we have also openness to this as well. Thank you very much.
Thank you so much. In view of time, Minister, we'll say thank you so much for your contributions, and we wish you all the best on this journey. I'll come back to our panel now. Thank you, Minister. Now, Ade, let me come back to you. And you know, there's a question of the unbanked, and we know across the African continent there are far too many who remain unbanked. Tell me, as a banker, how do you see the role in recovery, and particularly, let's take a look at those who've been on the margins, who have not been included, who are in desperate need. How do we then include them as well? How do you see EcoBank's role?
Thank you. As EcoBank, our role has to be to make sure that everybody that is participating in the economy does have ability to get financial services that they can leverage on to be able to participate. Our role includes making banking available to those individuals. Our role including also being able to lend to them, because one thing is to support them in being able to make payments. The other is to increase their demand capacity. And finally, channeling savings of people towards projects that will enable the economic activity to grow, enabling government to participate and create infrastructure, and enabling big companies to be able to come to our shores and actually create business opportunities that enable people to get hired. Working towards demanding those things that financial institutions, universities and and research institutions can do, so that in the future, as we go forward, we will not be queuing at the back of vaccine availability in the future. So the way we see our role is making sure we connect to all those people, enable them to save, enable them to borrow, improve their demand capacity, channel those savings into bigger companies and smaller companies in the value chain. And ultimately, I cannot talk about anything we are doing without paying tribute to people that have given us opportunity to get vaccine timely that is coming to Africa now, whether it is Gavi Alliance in terms of the work they do, the COVAX in terms of the work they do, and all the leaders that have put all the people at the front line of medical services, we pay tribute to them, because without them, we will not be here to have this conversation. Thank you.
Thank you for that, Ade. And maybe we need to give a shout out and a salute to Dr. John Kengasong as well of the Africa CDC, really trying to champion access to vaccines and care and across the continent in these COVID times. Delphine, let me come to you next. And it's well known that sometimes we struggle to help people understand the importance of insurance, and yet it is so pertinent at this time. It is much needed on the ground. How do you see the role of insurance in recovery, and how are you positioning yourselves?
Maybe I'll start by saying, indeed, many don't know the insurance market, and that's a bit of a challenge in Africa. I'll go back to a McKinsey report that said that before COVID-19, the growth of the insurance sector in Africa between 2020 and 2025 was expected to be 7%. This is twice as much as in North America, it's 3 times as much as in Europe, and it's even higher than Asia. So COVID has impacted the growth, mainly because people do not have the discretionary income that they usually have to buy insurance, right? So if we compare ourselves to the banking sector, we look at websites. 100% of the most banks in Africa have a website. There's a report also that says that about 90% of their customers are able to at least check some of their information online. And then about 25% are able to actually open a bank account online. But then you compare that to the insurance sector, where we have, most insurance companies have a website, but there's only 30% or even less sometimes across sub-Saharan Africa, if we take out South Africa, that allows customers to be able to look at their accounts online, and barely 5% of insurance companies allow their customers to buy, to quote, to get their insurance certificates online. So there's some exceptions in markets, in particular like South Africa. Some companies have revolutionized the way we buy insurance. One, for example, is Bima, which is a shareholder of Allianz, where you are able to buy insurance for as little as 30 cents a day, for 30 cents a month for coverage. 93% of the customers live under $10 a day, and about 75% of the customers never have insurance before. That's a great story, because it means that we have some companies out there that are going, selling, explaining what insurance is to be able to grow. And this is all about digitalization, right? They sell their insurance through digital. So what the insurance sector needs to do and is doing, and I think we need to go faster, is first use partners like banking partners, where banking is more understood. So then we can partner together to sell insurance. With mobile money operators, McKinsey just shared the 400 million mobile wallets. How can we access some of those? But then also, how can we fundamentally change the way we do business by digitalizing it, by partnering with insurtech companies, and then by making insurance available for the people that do not have it before. I think that needs to be our role, especially in the middle of the pandemic.
Thank you for that. Thank you, Delphine. Let me come now, Paul, to you, and staying on the focus on banking the unbanked and how to really bring this ecosystem of people into banking services. How are you addressing this, and especially in terms of new models, new products, new approaches?
Well, thank you for the question, which is not easy. We launched the bank, Orange Bank Africa, in Côte d'Ivoire by the end of July last year. After 7 months of exercise, we have reached 500,000 customers already, to which we do tiny loans. When I say tiny loans, it's loans of around $50, lasting for 1 month maximum. Usually these loans are repaid after 2 or 3 weeks. What we found out is that most of our customers come from the informal economy, which means that they use our loan just to buy wares, which they will sell in a very short period of time. So how can we do that? Well, 2 reasons for that. First is that we need, as it was said, to digitalize the relationship, but not only on a smartphone, because most of our customers won't have a smartphone, but a very basic phone, which means that we do all the transactions, including the credit, by using an USSD technology, which is based on SMS. That's the first point. The second point is data. How do you grant a loan to someone you don't know? Well, you need to have data on these customers, and based on the telco behavior, based on the mobile money behavior, we're allowed to say if we can or not grant a loan to someone. Which means, as you say, that we really need to reinvent not only the scoring business, which is the banking business, but also the UX, the user experience, to make sure that we can reach customers which have a very basic mobile phone with them.
Thank you for that. Thank you. Things are shifting and transforming so fast. It's exciting to watch how we're serving the needs on the ground. Ade, I come back to you. And frankly, over the past 10 years, we have seen a number of international banks leave the African continent. Let's take a look with the Africa Continental Free Trade Area, the opportunities that could be unleashed there, and the roles that banks like EcoBank play. What do you see your position, and where is the opportunity there for you?
Okay, thank you. It's a very good question. Our first responsibility is to ensure that the standard of behavior in our continent is such that will continue to attract other people to want to participate. So the global financial companies, they do have a role. We want to make sure that the standard of behavior and standard of performance is such that they continue to attract global players into our continent. Ultimately, connecting all the people in the continent, the makers of goods and the buyers of the goods across over 1 billion people, and expanding the market opportunity that represents is something that we're prepared to do. Where equally, we understand our role being a large company with multiple presence to include all the other players, because we can not just compete, we can cooperate. And that cooperation in making sure that that can be done is one of our roles. Because we are the only institution in the continent that have presence in 33 countries and can make instant payment across 33 countries, can ensure that both the buyers and the seller can establish trust across multiple geography. But that infrastructure, we don't have to use it for ourselves alone. It can become an enabling infrastructure that allows Africa to fast track and move forward much faster. So I come back to the situation. In the age in which perseverance is able to go to Mars, the technology that is required to solve our problem is no longer the problem. We need to have the mindset and dare to dream as people of this continent to not wait for 10 years and 5 years to solve small problems, but we now need to dare to dream to create the future that we want, and our kids can no longer wait to excel. Thank you.
Wow, we need to have the mindset and dare to dream and create the future we want. So, so, so powerful. Delphine, coming to you on that. And, we've talked about international banks retiring. Ade has told us about standards we need in place. Allianz has, come and gone in Africa. I think bought out certain branches at periods in several countries. Then you've had to retire from that. Do you believe, having gone through these experiences, that there can be a pan-African champion in Africa in the insurance industry? Are you still feeling optimistic?
Absolutely. I think part of the story that you missed at the end there was that we just purchased part of Jubilee Kenya, Jubilee Holding, actually, the PNC operation. So, for us investing, and it's the same for many people, right? It's simple. It's about the growth opportunity in the area or in the market that we're going to. It's about the regulatory environment. Are the regulators consistent and predictable? Because this also gives us a view on how our strategy is going to be rolled out across the continent. And at the end of the day, we also need to bring a return to our shareholders, right? So that's simple. So for us, we invest in markets, and the big investment that we did in East Africa right now is a testament to our support for this continent and the belief that we have that Africa will continue to grow. But we also need to make sure that the regulators keep in mind that, inconsistency in decision kind of makes it difficult for Pan-African companies to be able to stay on the continent. Our role as insurers, when we talk about trade in Africa, and I think for us, the pandemic has created about a 10% drop in the volume of trade. We have a company within Allianz called Hermes, which essentially insures receivables against default risk. So this is also the role that we as an insurance company need to be playing on the African continent. As trade is reducing, and as long as people are not able to trade, worrying about insolvency of the trading partners, then it becomes difficult for the economy to continue growing at the pace that it needs to. So again, we are here, we've invested, we've divested, but we've also invested, and we've invested for specific reasons on the continent.
Thank you so much. I'm going to come to the final question, Paul, and I want to make it very general as we close and just try to better understand. You know, we've got diverse players and stakeholders on this very panel. And if we think about all the key stakeholders playing in the African market right now, and particularly those offering financial services, who do you see as the most critical stakeholders? And if you were to have a preference of what they do more or less of, what would that be? This is your chance to almost paint a picture of what you see.
Well, it's not an easy question. Well, as it was said, we've seen many players doing part of the African banking business. The one we haven't seen so far, and it has been mentioned by McKinsey at the beginning, is the big techs. Obviously, we're quite concerned with the mobile money operators that they would come with over-the-top solutions, that they would try to impose their view, impose even their currency, as it has been discussed by some of them. And I think that in that sense, we should cooperate with the mobile money players, with the bankers, traditional bankers, also with the regulators, to make sure that there is a level playing field, that everybody can operate, and I think there is enough space for everybody, but that everybody can operate with the same rule. And if someone wants to launch, let's say, a banking business in a given country, targeting the unbanked, for example, is fine. It's in second news, but we have to do by the book, by the regulation book. And that's why we are very positive about the way the regulation is evolving in Africa, because we see it in a very constructive way, i.e. making sure that the business is properly done by the bank, but also by the new players like us, but making sure also that it's a sort of barrier of entry, not allowing anybody to do anything, which I think is good for the business as well. But just to answer quickly to your question, big data, I think, on the next to come into this market.
Well, thank you for that. We've come to the close of our panel, and I want to throw one last question at you all. And for everybody who is here, let's think for a moment about an Africa coming out of the crisis, all right? Let's think about the role we think that the financial sector can play in helping Africa build back. We're talking in so many conversations about building back better and building back stronger. So think about it for a minute. Ade, Paul, and Delphine, I want to challenge you to think of, what do you want that headline to read? A headline in the top papers in the morning about recovery and how the financial sector has seen things through. And to all the participants at home, write it down, write that headline down. And so let me come to the panel, throwing this at you. Paul, I'll start with you. What would you like that headline to read? I think you're on mute. Sorry, you're on mute.
Sorry. I would like the newspaper to say, at least finance is useful to the community, because it's not always that it's true, but if it could be the case, I think we would have done our job properly.
Thank you. Thank you. Ade, let me come to you next. What would you like the headline to read?
It should be financial services enabling Africa to power through Agenda 2063 that the African Union has put together. Because ultimately, that is the destination. We just need to power through that very quickly, despite the problem with the pandemic.
Thank you for that. And you're looking at the long game. You're like, we are looking all the way to 2063, which is great. Delphine, as a woman, this is International Women's Week. I'm giving you the final word.
You know,
as
women, like? I will come back as a woman and talk about unity. Yeah. And the headline, I think, should read that the financial industry in Africa have come together, not individually, but together to reboost trade in Africa. That would be the headline.
Thank you, thank you, thank you. I'll give you more room. Now you said you may want to say something about women, and I will give you a moment. Thank you.
How do you know that? You know, we talked about, you know, what do we challenge this year for International Women's Day, and I said one of the key things that we need to challenge, and then I am challenging, is the gender pay gap. And this gender pay gap starts from the beginning. It's not just in an organization when we're looking at the pay grade of everybody, but it's to make sure that the young women are able to go to school, that the women in the childbearing years are accepted back in the workforce and given opportunities to rise. This is my pledge for the year. And again, thank you.
Wonderful. Thank you so, so much. Thank you, Delphine, Ade, and Paul. It's been a great conversation. A very big thank you to the Minister of Finance, Ethiopia, who made time to be with us, and also to the team from McKinsey for sharing with us. We are at the close of our session. I'd like you to take a look at the headline you wrote down, if you did write one as well. And the question is, how do you challenge yourself to make sure Africa gets there? What's the role you play in making sure Africa gets there? My name is Julie Gishuru. It's been a pleasure to drive this conversation. And as part of the MasterCard Foundation, we're walking with you all. And we believe in collaboration and partnership. So it's been wonderful to hear about scaling together, interconnectedness. There's enough space. We can partner. And so we have a huge, huge responsibility to the continent. Let's not lose track. It's been a pleasure. Please do take a look at the screen. It will share more information on the program, and do have a rewarding couple of days. Asante sana. Goodbye.